Although Banco Filipino may not be a name that resonates loudly in the Philippines today, it is undeniably one of the country's historically significant banking institutions, and, intriguingly, one of the few to have undergone liquidation. It was a powerhouse, a financial titan, which, for reasons not immediately apparent, fell from grace. But did it truly fail? The story of Banco Filipino stands as a fascinating chapter in the annals of corporate history. Interestingly, the downfall of this banking behemoth was not precipitated by typical financial woes such as substantial losses or debt repayment crises. On the contrary, the institution fell afoul of the law. This transgression, however, might be interpreted as evidence of effective regulatory oversight. Rather than being devoured by financial difficulties, it was the regulatory framework that preemptively stemmed an impending collapse. Let's delve deeper into this intriguing narrative for a more comprehensive understanding. Banco Filipino, a name that once held great prominence in the Philippine banking sector, was founded in 1964. Its founders were ambitious, visionary, and not afraid to tread paths the others hadn't. The bank was particularly notable for its marketing strategies. It didn't just market itself as a bank, it positioned itself as a bank for the ordinary Filipino, hence the name Banco Filipino. In its early years, Banco Filipino experienced substantial growth and innovation. It was among the first to pioneer the concept of the savings and mortgage bank in the country, catering to the needs of individual and small-scale savers and homeowners. It embraced new technologies, implementing systems that set it apart from its contemporaries. Banco Filipino was one of the first Philippine banks to aggressively expand its branch network nationwide. From Luzon to Mindanao, it spread its footprint far and wide, making banking services accessible to people in remote areas of the country. It also invested heavily in advertising and launched high-profile marketing campaigns featuring popular celebrities of the time, further cementing its position in the hearts and minds of the Filipino people. Yet, even as the bank was making strides in the industry, there were storm clouds gathering on the horizon. The first signs of trouble emerged in the early 1980s, amid a deteriorating economic climate and increasing political uncertainty in the Philippines. Accusations of fraudulent loans and financial mismanagement started to surface, casting a shadow over Banco Filipino's reputation. In 1985, amidst these allegations, the Central Bank of the Philippines, now Bangko Sentral Pilipinas or BSP, ordered the closure of Banco Filipino, declaring it insolvent and unable to service the demands of its depositors. This marked the beginning of a long and contentious legal battle that would last for years. Banco Filipino didn't take the closure order lying down. It contested the central bank's decision, arguing that the bank's closure was politically motivated and unjust. After 6 years of legal battles, in 1991, the Supreme Court ruled in favor of Banco Filipino, declaring its closure illegal and ordering its rehabilitation. The central bank was ordered to provide emergency loans to facilitate Banco Filipino's revival, marking a dramatic twist in this unfolding saga. However, the battles were far from over. The years that followed saw more legal disputes over the exact amount of assistance that the central bank should provide to Banco Filipino, with disagreements escalating to further litigation. In the midst of these disputes, Banco Filipino resumed its operations in 1994, trying to regain its lost glory. In the wake of the court's decision, Banco Filipino swung open its doors again in 1994, with hopes of distancing itself from a troubled history. For a fleeting moment, the bank seemed on the path to recovery, but alas, the period of calm was ephemeral. The bank was soon besieged by the ghosts of its past. Accusations of questionable loans, mismanagement, and concerns over its solvency began to re-emerge. Despite these allegations, the bank's management mounted a staunch defense, pointing fingers at the BSP. They asserted the BSP had not provided the requisite financial aid as mandated by the Supreme Court, precipitating liquidity issues. In response, the BSP voiced severe apprehensions about the bank's financial state, spotlighting a high ratio of non-performing loans, inadequate capitalization, and government lapses. The BSP pointed to these factors as proof of Banco Filipino's incapacity to operate in a safe and sound manner. The situation reached a crescendo in March 2011 when the BSP, citing dire financial condition, mandated Banco Filipino's closure once again, placing it under the receivership of the Philippine Deposit Insurance Corporation, or PDIC. This proved a shattering blow for the bank, coming nearly 20 years after its first closure. In parallel, the ongoing legal battles and ensuing accusations dealt a severe blow to Banco Filipino's public image. By 2011, skepticism arose regarding the intentions of the bank's management, whether they were genuinely striving for justice or merely evading the ramifications of their actions. Amidst the legal wrangling, the bank's financial state deteriorated, with dwindling assets and an inability to meet depositor obligations, prompting the BSP to once again call for its closure. Yet the controversies were far from over. Allegations of fraudulent loans, insider lending, and deceptive accounting practices began to surface. A 2011 report by the PDIC revealed that a significant portion of the bank's loans had been directed to insiders, blatantly violating banking laws and regulations. Furthermore, the bank was accused of concealing its true financial condition from regulators and the public, falsely projecting an image of profitability and stability, even as it teetered on the edge of collapse. The closure of Banco Filipino unleashed immediate and far-reaching repercussions. Thousands of depositors found their life savings at risk. With over 177,000 deposit accounts, and though the PDIC assured a guarantee of up to PHP 500,000 per depositor, many were left in a state of uncertainty, anxiously questioning the recovery of their funds. The fallout also led to job losses and the shuttering of numerous Banco Filipino branches nationwide. For many employees, the bank's downfall signified the loss of livelihood, underscoring the human cost of this financial catastrophe. The fall of Banco Filipino had deep-seated implications for the Philippine banking industry. It undermined public faith in the banking system, casting doubt on the efficacy of banking regulations and the ability of regulatory bodies to safeguard depositor interests. The closure ignited broader conversations about the need for sturdier banking regulations and elevated transparency in the banking sector. In response, the BSP bolstered its supervisory measures over banks, intensifying its oversight of banking operations and enforcing stricter compliance with banking laws and regulations. This prompted a significant shakeup in the banking industry, giving rise to a more vigilant and proactive regulatory environment in the aftermath of Banco Filipino's demise. In essence, Banco Filipino's closure served as a reality check for the entire banking industry. It spotlighted the perils of unchecked growth, weak governance, and non-compliance with banking regulations. It underscored the critical importance of maintaining public trust in the banking system, and the pivotal role of regulating bodies in ensuring sectoral stability and integrity. This second closure could have marked the beginning of another lengthy and complex legal battle, but this time the tide seemed to turn against Banco Filipino. Unlike the first closure, when the bank managed to secure a Supreme Court ruling in its favor, the legal challenges against the second closure were largely unsuccessful. In 2019, the Court of Appeals upheld the legality of Banco Filipino's 2011 closure and the subsequent decision of the BSP to place it under receivership. The court found that the BSP had acted within its mandate in ordering the closure, and that there was substantial evidence to support the BSP's finding on the bank's insolvency and unsafe business practices. The final nail in the coffin came in 2022 when the Supreme Court upheld the decision to liquidate Banco Filipino. With this verdict, any hopes of a second resurrection for the bank were effectively squashed. The PDIC was given the green light to proceed with the disposal of the bank's assets, marking the end of the legal disputes and sealing the fate of Banco Filipino. The aftermath of Banco Filipino's closure and subsequent liquidation was far from smooth. The fallout was felt not just by the bank's shareholders, but also by its depositors, many of whom were left in a lurch. Despite assurances from the PDIC that insured deposits would be returned, the process proved to be arduous and time-consuming, causing distress and uncertainty among depositors. In the end, the story of Banco Filipino is a cautionary tale. A tale of ambition, mismanagement, and a long protracted battle for survival. It provides valuable lessons on the importance of regulatory oversight, the dangers of unchecked growth, and the devastating consequences of financial mismanagement. But anyway, do let us know what you think. Thanks for watching.